This is Elio Sage. I want to go ahead and do an end of the day market update. And like always, none of this is financial advice. Always do what's best for you. The market's in a very treacherous situation. There's some possibilities. I think one of the things we learned after close tonight is the Federal Reserve's balance sheet increased significantly and really offset all the tightening they have been doing since April, is what I read. If that's the case, what that's going to do is going to set back the timeline for their fight against inflation. All the hard work they did was kind of essentially undone. So what that may mean is now that liquidity goes back in the market and extends the bounce and also pushes up inflationary instruments. And then the readings will read much hotter in the months to come, where they'll be forced to raise even higher than they are for a much bigger crash later, which is kind of the scenario I had wanted to see happen before the banking crisis took place. The banking crisis led to this move, and really what they've done is essentially the Federal Reserve over tightened, and essentially the airplane where we were talking about a soft landing was ready to have a crash landing, a major crash, and they stopped that and they pulled the plane back up, and now it's got to recircle the airport for a while and make another attempt, and that's going to delay things and start all over a lot of the work they had done. So, or that liquidity they added is actually still not enough to offset the amount of credit evaporation and deflation that they've already set in motion. We know that corporate bonds that are going to roll over, that paper is going to need to get, restarted. I'm going to say, how to say it, like get, new loans at these higher rates, and they may not have the money to do that because they're cash flow negative, a lot of these tech companies. So there's still another shoe to drop there. You have commercial real estate that needs to mark to market, and anybody that holds that is going to get really hit hard. So there's still more shoes to drop, and of course there's the recession that oil's telling you is coming with the oil breakdown, and that will be revenue misses and earnings misses potentially. So there's a lot more shoes to drop besides what just happened. So we'll go through the charts and kind of get an idea where things are. The Dow Jones, I believe, here's a three-wave connector and a massive expanded flat, and now we're moving down in Y. I believe we have a 1-2, 1-2, and then at that point, there's too many other possibilities, so I won't label it any further. But more than likely, any balance will fail from here on out as we grind lower. Eventually, get into I'm looking at 26,000, maybe as low as 22,000, and energy breaking down is a good sign that we are heading lower. The SPY, again, I believe the connector is in now at 417. We have a 1-2, 1-2. The two finished today. On my Twitter, you can, I posted last night this trade idea, and it hit the target exactly, and we're already getting some rejection after hours. We'll see if tomorrow we get follow through on that trade idea, and then it could even come back up for another swing. So keep that in mind. Or two could be finished, and it could lead to a much bigger decline later. And I wouldn't really pay too much attention to this count unless we take the high out here at 408, and then it may open up the door to the extended connector, which is what I had thought we would see all along, but that's not very likely at the moment, but nothing's impossible. So perhaps, we could get that extended connector and keep pumping if the Fed really loosens conditions going into the meeting with this quiet QE that they've started, as well as not raising rates or even cutting rates next week. But if they follow through on their rate increases, the fight inflation and talk tough, I believe we'll get our 3 of 3 down. The triple Qs again showed the trade idea. last night, and we hit that area. Now we'll see if we get this pullback. Again, we have a connector, a 1-2-1-2, ready to go down to 191 or lower. And here's the thing, the connector could still extend. So again, keep in mind, if we take this peak out at 314.69, then it would be 5 waves up. More likely like some kind of lead in diagonal, and we pull back and then we come back up to finish the connector toward the end of the summer and fall. So that would be a delay of this drop that people are expecting. If we break 313.85, that's very possible. So that's something to keep an eye on. So really want to see tech pull back now. We have what it looks like to me, 5 waves down. I do believe there's some divergence here, as you can see. So, and then you have a 3-wave bounce, and you're in between the 2 and the 4, exactly where you would want to be for this type of corrective structure. So, it's set up on a T for the bears to crush this thing tomorrow. So we'll see if they can follow through and do that. Of course, there's another alternative where this is just A, we get B, and then we get a C like that going into the Fed meeting, and then we come down. So still, that's possible. We'll see, but I do expect a pullback. And if you really look at the 45-minute, you see the stochastic starting to roll over. We're oversold, bought here. So it looks like we do need a 45-minute cycle to turn over. The 4-hour cycle looks extended, not turning over yet, but it looks like we're getting, it's getting a lot of the upside's gone. The daily is actually also pushing higher. Could continue. That could support this move that I talked to you about, where you get this pullback to reset the 45, and then we get another pump up in C to kind of complete the daily stochastic, and then that gets you ready for the water, the big sell-off here. Again, you take this out, I think it just becomes 5 waves, and we still pull back, but then I think it sets you up for another rip later. So just keep that in mind, and we are seeing tech move because what we're seeing is a lot of FOMO. Again, we hear it, tech is a safe haven. I swear we heard the same thing in these areas here and here. It's a safe haven trade. It's not a safe. When you watch, when they miss earnings, you'll regret it, or rates continue to rise. People will wish they didn't follow that advice as a safe haven trade, because it's far from it. But that's where I think we should pull back. IWM, this seems like too short of a bounce. It'd be too bearish, so I think we could fail and go up one more swing, and that could also make the market think about that, like where we pull back and come back up but still respect this area here. But there is a chance it could it be done? I don't think so. Let's go to the 4-hour. Yeah, no, we haven't. So we're still in the same corrective cycle. So in some ways, we really can't even call 5 finished yet. So I think it's better to not label it, because we could even still be in 5, or it could even be a 1-2, 1-2, 1-2. So the Russell's pretty bearish, but I do think it seems likely 5's done, and we just need a bigger relief rally to correct that. If we don't get that, then I don't think we're in 5. I think we're in some other more bearish, uber bearish account, where it's like a 1-2, 1-2, or we're in some kind of 2 where this is like an ABC, something like that. So that's another account on the Russell, and that count could get a little more upside, potentially up to 181. 184, somewhere in there, if this is the count, and we can leave it like that for now. But I wouldn't, and that would be another back test and rejection of this trend line that broke. So that's what I'm thinking for the Russell. But I really like the setup in tech with the stop here, SPY, good setup here, could still go a little bit higher. The Dow, I'm not really messing with it, too many possibilities, but it is overall bearish. And then Bitcoin, if you had been following me, I told you guys that this was a buy here. I was like, this is a buy, not, if but I said you may want to open up your stop to 1900, and hold that. And what really paid off, and we took this high out. So what does that mean? I really think it opens the door to 30,000. And then I think the market will have to decide, is this the actual low? Or is this a connector and will go much lower? So it's tough to say, because I think the overall stock market will break the October 22 lows. Then more than likely Bitcoin will do the same thing and break this low and maybe head down to 10,000, 12,000, as low as 8,000. So I'll just leave. I'm keeping that idea alive, but I mean, if I look at this, it's probably some kind of like 1, 2, maybe 3, something like that. I mean, this couple possibilities. It it would be unlikely if it's finished here like this, but I could force a count that looks something like that, the finished account in an expanded flat. So there's a possibility that Bitcoin's done. If it's done, typically we would see the rejection. Let's see, right at exact. So yeah, I'd be really careful. Look where it got rejected, literally at 26,494 to the penny almost. So given that, that's probably the structure then. So most likely Bitcoin, and that may be signifying to risk assets that that's it. It may be done, and then we can label it a little differently as an impulse this way. 1, 2, 3, 4, and 5, something like that. We could even put the 3 here. Doesn't matter in the end. Something like that. And you can see massive divergence. So it's an impulse. So that's what I would look for. So that's probably Bitcoin's chart. I don't think it will extend out personally. Then gold, everyone's like, I think gold will take this high out and then pull back as the market pulls back. And if we do take this high out, then it should respect this low. And this very bearish scenario is negated. It's no longer in play, which actually means the grand super cycle crash that people are expecting most likely won't happen. It will be supported for now in a different count, where the gold will be in a wave 4, where you have a 1, 2, 3, 4, 5, and then when we make this new all-time high, then we'll get a massive pullback, which would probably be the end of the grand super cycle. So this would extend the market higher typically, but we are seeing correlations break down with gold that we normally are used to seeing. So no guarantee, but it is nice if it can take it out, because now this would be a great opportunity to go long for some upside and in the miners. But if we can't take this out, then the uber bearish scenario is in play. It is in play, whether people want to believe it or not. This is in play until we can take that high out. So until that happens, there is a chance for $800 gold and a massive indice market crash, deflationary crash. But it seems the higher we go, the more likely we'll break that high and negate this scenario, and then that would more than likely negate the silver scenario, and then that would also mean we're going back to the scenario where silver runs to new all-time highs and then has a dramatic pullback, only to be supported and then really go parabolic later. So we'll see how that ends up. But silver's in an area right now where it's struggling, and this is the more bearish scenario for the metals. So it's really got to take this high out up here at 24. So hopefully it can do that. If it can't, then this uber bearish scenario is in play. Natural gas is here, and as you can see, it's trying to hold this low. Even if it doesn't hold this low, I wouldn't be too worried about it going to zero. So for me, it's a longer term hold, multi-year hold. and all the other instruments that trade with that. The 10-year is interesting. It pulled back just like we had expected in an A, B, C. The C could be done. It could have truncated. If not, it could extend a little deeper. I believe this has been very positive for technology. So this could push technology a little bit higher. So we have to keep an eye on it. If it's finished, then the technology run should be over as we go to a new wave 5 high. And just like we saw in the 2-year, this will be negative for the market. And then as this peaks and we get this water, again, a massive decline, and just like we saw in the 2-year, I'm sure there'll be massive risk off in the market as everybody goes into long-term bonds again. And then the 2-year, if you had been following me, we had the sell area nailed on that, and it was just been a straight down crash correction. We've already hit the wave 4 lows of lesser degrees, so in fact this low could even be in a straight down. Now I thought this could take many months because we're correcting such a long cycle on the 2-year, but because of the straight down crash correction, it may actually have already completed its correction, and we could already be working on now wave 3. And that is something that may not surprise me now if the Federal Reserve is pumping liquidity in, and now we have to extend out the rate hiking cycle as this all bleeds back into inflation. Now they have to take rates even higher to take out this liquidity they just put back in. And so that will get us to the 2-year at 8.6 as high as 11.6. And this will start putting pressure on the government itself when we get up there. But this will absolutely collapse companies if we get this. If this is done, so we need to keep an eye on this 2-year. But it technically it meets all the requirements. It was intense enough, deep enough. It hit the 4s. I mean, I just keep it. You got to keep an open mind that if you're trying to go long bonds here, especially the short end, we knew, like when we came here, I said in one of my videos, the rate hiking campaign has ended. And this was before any banking news came out to justify why, because at that point it made no sense to say such a statement, but technically it did, and now it makes perfect sense. But perhaps now I'm saying the rate hacking campaign is now going to need to even accelerate more than we ever thought. And I know right now that doesn't make sense, but perhaps soon it will, as perhaps some more inflation kicks in the next couple months and the reports get hotter, especially if the Fed pivots or pauses or doesn't do much, or they surprise everyone with very hawkish tones. So I do think there's risk for higher rates at the moment, not lower rates, given what had happened. We need to keep it in mind that all possibilities. So we need to keep an eye on that. But because we have 5 waves up off this low with divergence, we know, and this is correct in a 40-year or 50-year move, we need an A, a B, and we need at least one more leg higher in C. So even if this 2 goes lower, we know C is coming. In the back of our mind, we know this leg is going to happen. We are going to be at 8% rates, guys. So if you're interested in refinancing, or you want to, you take advantage of this little dip in rates is coming up, do it, because when this C comes, it's I think a lot of sad people are going to be sad they didn't take advantage of that. So I just mention it because the way the technicals work, again, I don't make the rules. This is just kind of how the market works, A, B, C. And then if we can peak here without a 4-5, then we could end the rate hiking cycle and then go back to the normal bull market we've always seen. But again, if we get another 4 and 5, it just will continue higher. And that's just the way it goes. So right now we're in 2. It would surprise me if we're done, but it technically can be finished given what happened. Crash correction. And think of COVID 2020, how the market corrected a major cycle so fast. It can happen. These crash corrections happen. The VIX is, again, found resistance right on the trend line. It could pull back if the markets can continue to pump higher, or it could start to build again. If we can come out of this structure, you'll see a massive sell-off. And then the dollar index is in an indecisive area. There's this count I have here. There's another count that I've shown before to us online on my Twitter feed. It can even be this, and then we pull back to a new low. So it's too many. It's obviously going to wait to the Fed meeting, I think, to make its move and tell us and show its hand. So that's going through the market at the moment, and yeah. So for right now, the market had a relief rally. We're in it. It could still continue. We could still, like I said, we could still bounce, pull back. Like we're due to pull back, and then bounce again. It could still do that, or it could just pull back, and that's all she wrote. The surprise to me will be a continued extended higher. And that can easily do that, and if it breaks back over these levels, 407, but more importantly 418, then the extended connector comes back into play, which is what I had originally forecasted many weeks ago before the banking crisis, and I put on my Twitter before I had to wipe my channels out. I was actually long, and I wasn't having any intention of selling only until I saw the Russell and the financial sector break, and we seen the follow through after that, day after day. So that was the only reason, because I don't like to be on the wrong side of the market overall, because it's hard for me to believe that the Qs and SPY will outperform and then the Russell is going to crash. But I mean, anything's possible. So until the Russell, really what I'm looking for is until the financial sector bottoms. I'm not interested in any long-term holds on the long side of the market, and we'll need to win. And then at some point when that sector bottoms, then we could see where everything else is trading at the moment. So just to go through, the sector, like Schwab, a lot of FOMO in Schwab, and like hype for whatever reason. I guess it's one of those names that are sentimental to people for some reason, but it still looks like it needs a wave 5. We talked about Credit Suisse many months ago. I've been given updates on where this was heading, and if you really look at this C wave sequence, you have like a 1-2, 1-2, maybe you have a 3-4, so it still needs, and you don't have any divergence, so you're still in wave 3 here, so you still need a 4 and a 5, so this is going to continue to go lower. I wouldn't mess with it. I wouldn't touch it. FRC was one today that people again were excited about. Now it hit an area 3042 is finding support, but again, if you look at the sequence, you have A, B, and now you have a 1-2, but you don't have a 4 and a 5, so you're missing the 4 and the 5. If it can stay alive through that. So there's all those things, and of course Bank of America is really important. It now looks like it could be done 5 here, and it could be bouncing, or it could still be in a 1-2, 1-2, but it should be going down to 18. And so when Bank of America and the financials are in their buy areas, then we can look at where these indices are trading to see if it makes sense to start being more aggressive with the market. But until then, I wouldn't. So anyway, so we'll see. Like I said, going back to Bitcoin, this is my preferred view on Bitcoin, but if we do pump and make a new high, then it could go back to more like a 1, 2, 3, 4, 5 and hit that 30,000. So it's tough to say. I wouldn't short it here. I wouldn't recommend shorting it. I'm sidelines on that. So let's see if there's anything else I want to say about the market at the moment. So yeah, a lot of FOMO. Now there's some positives in the market. We have 5 waves up on a lot of instruments like AMD's, 5 waves up. Erase and divergence. 1-2, 1-2, but as you know, if you erase divergence, then it becomes a corrective structure, so that's also bearish, and even though unless you can get that divergent top, so we'll keep an eye on it. But what the separation we're seeing from the low, like in AMD and Meta, should tell you that even if the market indices make a new low below October 22 and these lows hold, then there is not going to be a grand super cycle crash. It's just going to be a massive dump to maybe SPY 300, but AMD may hold this low now. Maybe that trades at 63, which will support the market and support it from going, down to the 225s and stuff. So these are actually positives for long-term investors, but it's it is something that we need to see more separation. But you see, like a stock like Google, there's no separation. And it's in a short area, so this is dangerous, right? So there are some mixed messages in the market. Facebook, Meta has a lot of separation from the low. Netflix does too. These will probably hold these lows on the pullback, most likely, unless it's a massive expanded flat, which I don't think it is. So this tells me the overall bull market may be intact, even as the SPY pulls back. And maybe tries to tag 300, 310, or even 284. So some stocks may hold lows while this catastrophe happens, because they made enough space on the upside. So that's why you have to kind of keep an eye on some of these stocks and understand like where you'll get in, because not everything is so bearish, right? So not everything is super bearish. But the indices, I think the IWM is really pushing, getting ready to break this low. I think the triple Qs and the SPY will soon follow and be down at 360, and the Dow as well. And I didn't mention oil, but as you know, we have a massive top, and it broke bearish, and now we're in the wave 3. And it should just continue lower all the way to maybe 42. And then when we trade here, energy will be a really good buy, I believe. And then I do believe we'll get another swing higher at least to complete a 3-swing move in oil. If just to give you an idea, so this, we could see something like maybe oil come to 165, 195, or hit where I think in 211. And of course, I'm sure the indices are going to be like decimated. That would be more of hyper stagflation play out. Perhaps the Fed gives in ultimately here, and then it just things go out of hand. So who knows how the story goes, but I do believe that we've got there'll be this will find support for one more swing higher at least, something like that. So but downside, so that means the energy is correcting its cycle from the March lows. All right, that's all I've got. And you have to resubscribe and get back on my channel. And in other videos, I can explain what happened. And as I build more subscribers back up, we can live stream and chat. But I'll more than likely be shutting down comments. Just so you know, there was some really I would say threatening language that alarmed me that we needed to get off. But I'm gonna still continue because I need to help people, because even for the few days I was not online, I saw so much bad information being put out. I mean, I had an Elliott Wave like lady who's got, I think, tens of thousands of followers. I mean, so we had this is how you label a wave, but for whatever reason, she had it like something like crazy, like 3, 4, like I can't explain how to explain it again. Yeah, I think the five was like it was like all mixed up. So it was like a 3 and a 4 and a 5, something weird like that. And I'm like, yeah, this is just not gonna work. Like, I just can't have you guys getting advice from people that are not good at what they're doing, and that's what I want to avoid. And it's a lot of bad advice out there. So we'll see. That's so I decided to come back, and I'll deal with these idiots that want to try to stir up trouble, and we'll go from there. right, guys, that's all I got.